A lot of the British banks are typically lending 10 to 13 billion pounds a month. Most of that is in some form of real estate or consumer finance. And we're trying to lend 1 to 200 million pounds a year.
So Craig, why would a small business lend money from your company?
I think the way the banks operate now is that they're more focused on what we describe as commoditized lending. So consumer finance, credit cards, car loans, and they like home loans, residential, commercial, industrial, real estate. So anything that is a swipe or a click or an algorithm, they will do. But what they increasingly don't like is what we call non-commoditized lending, specialist areas of asset finance, project finance, cash flow finance, invoice finance. They're struggling to do that because it uses a lot more regulatory capital, it has a lot more operational oversight and ongoing monitoring and management. So it's more of an expensive loan for them, and it's a more complex type of lending for them. So increasingly, small businesses are coming to groups like us, and we have an increasing footprint in that space with some significant team members that bring years of experience, who ironically came from commercial banking over the last 10 or 15 years.
Can you tell us some of your experiences of lending money to small businesses?
Yeah, so we've lent money to over 7,000 small businesses in both our London and Cambridge lending operations, nearly £1.5 billion over 15 years. And we have clearly focused on key areas, but where we're particularly strong is in areas such as asset finance, so that's specialist equipment, machinery, vehicles, and then we focus on project finance. And we've been very strong in areas where essentially dealing with agricultural, farming, food-related businesses. And all of these groups have got very significant rising costs. And so increasingly what we're doing is strategically helping a company to finance out a particular fixed cost or finance in a particular productivity gain. And that increasingly with what's going on in the UK and across Europe with rising costs is clearly a big demand for companies to seeking assistance for that.
So what reassurance does a small business give you when they take a loan?
So we take a lot of security. The type of lending that we do is very bespoke, so every deal is different. But we will take maybe a cash deposit, we will take land and buildings and other unencumbered assets. We may take out credit insurance. We often take a personal guarantee from the board of directors. And increasingly we're taking things like a debenture, which is a legal charge over the bank account of the company. So we actually control the bank account of the people we're lending money to. And in essence, you've got a whole package of different security. But in addition to all of that, often the way that we lend is that we lend an asset. So the actual asset we own as well, or we certainly control it. So there's a lot of different parts to the security package, but it gives us a lot of comfort when we're able to advance money to a small company. And then the other side to bear in mind is that a lot of the British banks are typically lending 10 to 13 billion pounds a month. Most of that is in some form of real estate or consumer finance. And we're trying to lend 1 to 200 million pounds a year. And that's the difference. So we can be very picky and very choosy about where we lend and how we lend and what we lend on. And because it's non-traditional or non-commoditized lending, we can take our time and focus on the underlying needs of the business. And it comes back to that strategically financing out a cost or strategically financing in a particular productivity or efficiency gain for the business.
Can you tell me about the process of sourcing loans?
Sure. We clearly have lent money to a lot of different small businesses in both our companies. And they have clearly an existing installed base of customers. But what we also have is a network of intermediaries that bring us deal flow, lawyers, accountants, financial advisors, specialist commercial loan brokers, manufacturers, and even banks now are referring business to us, which is a new development. In the UK now, banks are required to refer a borrower to another lender if they are unable to lend them money. So increasingly, a number of banks are giving us deal flow because they view us not as competition, whereas if they gave it to another bank, that would be viewed as, competitive. So they basically are giving us deal flow, but we have a very vast range of different sources of deal flow, and not least the fact that we have a sales team and a website, and clearly we've been doing this for a long time, so our name and our reputation and our brand is starting to get out into the small business community.
Well, thank you, Craig Reeves, for joining me and speaking with me.
Thank you.